And we are live.
Good deal.
Awesome. Good morning, everyone.
Good morning. Good morning.
Viewers are already coming in. That's fantastic. Welcome, welcome. We are here. It's Thursday morning. It's the 8th. And we are going to talk about some trading things, some investment things. This is the live MT show. We're here every morning. Every Thursday morning. We are online every morning, but here every Thursday morning at 10 a.m. To discuss different aspects of the market, different going ons that we come across in our day to day trading from our clients and our own personal experience, and we try to relay that to you as best we can. So, looks like we are not live on Facebook today, only YouTube. So, hello, YouTube. Make sure Facebook gets added back next week. We also have the interactive comment box. So feel free to drop a comment in there and we can get you up on the screen. We can answer your question best we can with the information that we know, which there's quite a bit of experience here. To my right, Randy, how's it going this morning?
Good, great.
Good.
It, it's nice the market's finally making a little bit of a correction because
Yeah.
living at the all-time high is not the place it's always going to be. So
Yeah, but it did a lot of it pre-market, so we can't even really, do as much with it as
yeah,
we'd
yeah,
like
it
to.
just it gapped down at the open,
Yeah.
but that's good because
Yep.
I've been telling everybody to kind of stay light in the market this week because of the FOMC meeting minutes announcement yesterday,
Mm-hmm.
and but I guess it's also supposedly because Tokyo said that no spectators at the Olympics because of the virus. So it's they'll always make up some reason, but it just is you don't have a profit till you sell something, and when
Yep.
everything's at the all-time high, more likely that someone's going to actually sell. Selling makes the market go down. That's just it.
I would agree with you completely, especially if you're looking at like a gap down situation.
Yeah.
Uh, when there's big money that needs to move positions, and I completely agree with you. Um, do you do you think that what I guess what's your theory for why there's always such a reason and not just like what it is like that? Why does there always have to be like this causal thing, even if it's not causal to what happened?
Well, you can always be, accused of like conspiracy theory or whatever, but the big money, they can't make money if you're doing what they're doing. That's what they talk about the institutional investors and the retail investors, and we would be called the retail investors. They look at us individual traders as retail. So the institutionals are like the hedge funds, the pension funds, the mutual funds, the what they call the family office funds, which is if you have a couple $1 billion that you want to invest, but you don't want to go out into the regular market, you hire someone to just do your stuff for you. But they have the big money, the millions and billions of dollars that go in. So if they want to buy something, they don't want to buy it at the high. So they don't want to tell you to buy. They want to tell you some reason that you should be selling so they can buy it. And then on the other side, when it gets to the top, they don't want to tell you to sell because they want to sell first, like today, and then everyone else comes in at the lower price. So they, I you don't hear ahead of time of what their thinking is. They're not going to tell you ahead of time, of course, unless you want to pay thousands of dollars a year to get some investment letter or something from some guru out there. But when someone's going to trade, 8 million shares on Apple, they're not going to tell you before they do that because they don't want to get in at the new price. They want to do it at the existing price. Then they want to tell you, oh well, this is why it happened. So they don't want to make it sound like that they're kind of moving the market around. They want you to sound like oh, there's a reason that this happened, and it was out of my control. We,
Yeah.
we had no control that Tokyo was going to say no spectators at the Olympics. They had already had limits, strong
Mhm.
limits as to what who could actually attend in person and stuff anyway. So it's not a huge stretch to say, well, we're not going to have any actual spectators, but
And I
there's
mean,
other reasons. There's financial reasons in the market of why the market is changing. It's not because of Tokyo saying that
and
the Olympics aren't going to have it.
how much does a viewership at a future sports event have that big of an impact on um, tech sectors in the U.S.?
Yeah,
Sure,
yeah. Now,
bit,
now,
right? There's some advertising and some commerce
yeah.
that is
It's
related to the Olympics, of course.
yeah. That event's not going to change the
But
financial outlook of all the major companies in in
yeah,
in the country and in the world. But now you could expand it to a greater fear that the world is going to shut down again because of viruses spreading more rapidly or whatever. Now
yeah.
that would be a different economic outlook. You know, what's the probability of that happening? So there can be a quick knee
Mhm.
jerk reaction to say, oh no, the sky's falling again. Or you can look at it and just say, okay, well, what's really changed today from yesterday or the day before?
Yeah.
It's the same virus going around that's um, getting becoming more like just a strong flu, because typically every year 60 to 80,000 people die of the flu. That's never publicized. If you divide that out, that's 1,500 people a day that die just because of the flu that we get every year. We don't shut down the economy, we don't close schools, we don't close businesses, and we're almost down to that level now because there's starting to be some immunity out there. So what
It'll
is
be,
the economy going to do?
yeah,
People are taking
with how
advantage.
well, I mean, there's quite a bit known about the Delta variant they've been talking about, and it'll just be interesting to see how it plays out. We won't go too deep into that can of worms, but
No,
um,
no, but
yeah,
those are the kinds of things that the big traders in the market, they're not looking at what's going to happen tomorrow or the next day.
yeah,
They're trying to look at what's going to happen in 3 months, 6 months, 9 months. That's why they're so focused also on the Fed with the interest rates. Are they going to raise the interest rates at the end of 2023, 2 years from now? Or oh no, they may raise them at the beginning of 2023. Oh whoa, that's a big deal. We need to be trading something different today based on that. But that's the kind of thing that's when you're trading at the all-time highs,
yeah.
it doesn't take much to get somebody to say, I'm going to take my profit right now. I'm going to go
Yeah.
ahead and sell. Then we'll see what's going to happen after that. And if it gets low enough, which is what's been happening for the last year and a half, it gets low enough, the big money comes back in, buys, and it goes back up. And that's what's been happening so far. Is that
Which
going to
is,
keep? Is that going to keep happening? Who
yeah,
knows? You know, only the shadow knows, as the real old radio program. Um,
hmm
but
which is something we've talked about. We were talking about it in reference to I think it was earnings and how earnings doesn't really have the effect that you may expect, and it doesn't have a consistent effect to what happens. Um, I think there's a lot to be said for how the going ons of the world relate into the price and bake themselves into the price. It's not necessarily a this for that situation, and it's certainly not a this right now for that right now situation. Um, the timing of price effects are come much before the event, and then something different happens at the event, and then a little bit after. Um, there's just yeah,
yeah, in a lot of cases, the big money reacts first and then thinks
yes,
later. So they kind of react to the worst case scenario quickly and then they kind of figure it out later on, decide, well, that maybe not right exactly what is going on, and
Yeah.
then they adjust a day or two later. So um, the average individual person, trying to react to all that, you're you're always going to be behind. They're always in front because they have all the research and the money that gets spent on trying to determine the outcomes and talking to people, in Congress, talking to people in the industry, talking. They spend lots of money figuring that out. You're never going to be ahead of them, and so that's
And they have,
one.
I mean, how many people working on it too? They have a force,
Oh yeah, they,
a
they have
company,
army. Yeah,
a company associated to this. Yeah.
yeah. I mean, they'll have analysts that they live and work at Google. They spend their entire time analyzing, talking to people within the company to try to figure out what's really going to happen, insider kind of information. But that's one thing that leads to like our discussion today on ETFs.
Hmm.
See, if you're just trying to figure out any one individual stock, things can happen and it could go way down or way up based off of comments by one person.
Yeah.
But the ETFs or exchange traded funds, it's a group of stocks. Like the Nasdaq 100, the QQQ, it's 100 stocks inside there. The SPY, the S&P 500 ETF, there's 500. So major changes have to happen to a lot of companies to make those things change. And when the money's coming into the market and it starts going up, the ETFs go up. If the money's pulling out of the market, the ETFs go down. But they kind of set with the overall market as opposed to an individual company that that may not come back up. Something could be said that investors just don't want to come back into a certain individual company, but the money flowing into the market raises those ETFs. When the money comes out of the market, those ETFs get lowered. Um, so it's a diversification process where you don't have to pick like a winner or loser. You're basically investing in where the market's going and what it's doing in the depending on the length of time that you
Yeah.
want to hold it. But whether it's a week or a month or a year, do you have it in a long term account that you just want to grow for 15 years, or are you trying to generate income on a daily or weekly basis? Um, they, they just offer that a little bit of safety from diversification. Now, then there's an argument to say, yeah, but it's not going to move as dramatic as like an individual stock, and yeah, it may not, but I like the ETFs
Well,
from the
we
diversification part.
yeah, we can talk about the movement too. Everything moves a certain amount, but how you leverage that movement is an entirely different situation, and the speed at which it moves is not at all restrictive to how much there is to be made or lost in a
Hmm.
certain amount of time. But anyways, that I yeah, we're headed in a good direction. Joe, how are you this morning?
Hey, good. I'm good. We
This
kind of,
is our intro.
yeah,
we are
yeah, yeah.
we're
Well,
killing
I didn't tell you this, but I didn't get a chance. But Tim had texted a while ago and said he's probably going to be here. He had an emergency to take his son to the doctor, but it's not
yes.
far. This is long, so he's probably going to be back. Mark, for the folks out there, will not be here. He's upstate New York. His sister went in the hospital. He flew from here up there yesterday, so he won't be here. But he was the one that wrote that tour for this weekend. So Randy, I have to kind of paraphrase on it here. I essentially don't know what you guys were talking about because the technique that Randy uses is covered call technique, and it's fantastic, and he's developed it into a fantastic income producing tool. We just do mine of the fan series, the micro moment trading. And we don't get concerned with any of the stuff you guys were just talking about. In fact, we think we're like a what do you call it, pole dancer.
Full dancer.
Yeah, yeah. Uh, and the market is both. And we don't care if we're at the top of the pole, the bottom of the pole. We don't care. When you look over there at the today, and you see that the market's still down 385 on the Dow, 50.17 on the S&P, and 181. Red, red, red. The way we look at that, we don't look at past we never think more than 2 or 3 minutes ahead, and because we don't care if it's all red, if it's all split up red and green or whatever. We're not trading anything red or green. We're strictly trading the volume, the volume of the Qs and apples and such. And we pick those just simply because they're not going to go out of business. And past that, we don't care when the company has earnings. We don't care how that's going to affect anything. We just are for the moment. When that market opens, we look at it and say, hey, everything's red, so we're going to be, doing puts, or everything's green, we're going to be doing calls. And it can change halfway through it. We don't care. And we meet every day. And for an hour trading in the morning, don't ever trade more than an hour using our technique. We made 19.0443% today over 5 trades. Yesterday we made 29, so we're up about 49 or 50%, 68% for the 48% for the week. That's only 2 days of trading since Monday was a holiday. 48%. We average over 100% a week for the last 113 weeks. We've been doing this 5 years. 113 weeks is a subscription service. That's when we started it. And we're averaging over 100% a week. Tim, Mark wasn't there today, and it was just Tim trading this morning. But we're just strictly by the moment. That's why I say we're like a pole investor, up and down. Now, we don't care on the pole where we are. We just know that we're going to be somewhere in there. We're going to be trading.
And I think there's still a bit of a going with the overall trend, kind of like but the macro trend within micro moment trading is like the last 2 hours, as opposed to the last 2 months.
But Mike, we don't trade but an hour a day, but we're never in a trade for more than maybe 15 seconds from entry to exit, and then we're through for the day. We're not through for the day. We may do several trades, but then we're never in one overnight, and we're never in one longer than 15 or 16 seconds. Now, sometimes one that's really going slow, really is a bad trade, will hang out there for a minute or two. But Randy looks at them totally different, and Randy is more concerned about things, what's going to happen during the day when he gets on his computer, because he's actually buying the stocks and selling the calls, and then manipulating to make daily cash returns, even when the stocks don't go up, even when they go down. He's at least buying something. We're just buying an index and trading an index, and we got tremendous leverage in that we're almost 100% leverage because we're only buying an option, and so like today, I think Tim was in at Apple for 98 cents, and on that particular trade, he made 12.2641% return in, I don't know, 7 or 8 seconds, and that's what we do, and that's the difference. Where Randy has incredible what he does. He certainly, has a lot of people that pay attention to him. And Randy and I do those similar together. We get back into them now that we can get out of the house, doing our 2 days, which we did up until March of last year, I guess. Been a year and a half. But that's what we do.
Absolutely. Mark is one of the traders on micro moment trading that trades the Qs. That's who we mentioned. He is not able to make it.
Yeah, he does the old man version. That's the slow version. In other words, he'll be in a deal for minutes. He can't handle he's got dexterity in his hand with his mouse, stuff like that.
Yeah, he seems to hang out in the 2 to 3 minute range.
Yeah. So
but and that's one of the things. We have a range of different types of trading techniques that we teach, and from all the way from the multi-seconds, what Joe is talking about, the micro moment trading, in and out, either buying a call or buying a put, depending on the direction of the intraday streaming chart, which you have to have that proprietary chart to be able to really benefit from doing that trading activity, the micro moment trading, where you're watching the beginning of momentum and you're buying the call or buying the put direction, depending on which direction that it's going, and then out in less than a minute, generating great returns.
Yeah, and Michael, let me put in a plug here for a really, really important master class seminar coming up the 24th and 25th of July, a couple of weeks. Big
I
cocktail
have more.
party on the 23rd Friday. You're going to be there, Mike. Randy's going to be there. Randy's going to be one of the presenters, along with Tim, and along with oh shoot, who else we got? We got Tim
I
and
think, is it Mark going to be teaching and
Mark.
it,
Mark's going to be
Cezanne?
Mark and
Tim,
Keith.
John, Randy, and Keith. Randy, Keith, and Cezanne and Mark have been with us forever. I mean, we're talking in the teens number of years. Tim's, yeah, 2 or 3 years. And
He's a
so
newbie.
you always wonder, how do these people really get these returns? Does Randy really get those returns? You're going to be able to ask him. You're going to be able to talk to him. You're going to be able to shake him, slap him around if you want to. Just slap around Randy, yeah. Because they were, and then what, the other thing is why it's so important about that master's class. We have all these clients, and those clients every day when we're doing those seminars in the morning, they're telling us when they make those trades, and they're making as much as we are, and they're going to be there. And you can ask them. So if there's any doubt, I just cannot believe in the whole world where they think the average return is going to be 10% a year in the best of circumstances, forever. And I'm writing an editorial today. It'll be this weekend, and then we'll talk about it next weekend. But it's how things have changed over all the years, and everything has changed. It used to be you had to go down to the broker, stand in front until they opened, and go inside. And they have a picture in there. Cezanne in Merrill Lynch office. She was 12 years old, standing outside waiting for to open the door. Anything, and then computers now have changed everything. But what's not changed? What's not changed? The returns they get. Now you would think, if they were an automobile company, they'd be out of business. Because everything in the world's changed. And it's so fantastic and it's so easy now versus what it used to be. What are the returns? The returns to average 10% a year. We make that in 15 seconds. You know. So why didn't everybody realize? Well, they don't think it's true, but the vast majority of people or everybody in the world be tied up versus some dumbass brokerage thing, where they don't make any money. And so here you can actually talk to these people and you can talk to the clients. That's why it's really an important seminar. They can sign up for it at www.micromomenttrading.com and sign up for it right there.
Yeah.
So,
Yeah,
Uh,
and
I'm gonna have
at that masters, you're not only going to see how we use the existing techniques and processes, how we're improving them, but you're going to learn some brand new stuff that you haven't been
yeah.
exposed to before.
Mark has some brand new stuff, and I think Keith may too. Also,
Yeah,
Keith.
Keith will be. Yeah,
Remember Keith been with us forever. And remember the one year he made just a couple percent short of 1,000% as an account. And nobody, of course, believed it. So we had the actual brokerage statements there. And what he has to say is so valuable, along with you. I mean, my goodness, I mean, you've been with us almost. At least you're the oldest.
but if you can't or don't want to attend in person, it's going to be a great event. It's
It'll be
it's
online.
it's a fantastic event, and you can mingle around with like people, your same clients that are using the techniques. You're going to be able to talk to just those everyday people, in addition to the instructors and Joe, and listen to people right there in person and talk about not just see us online, but you can also just register to be online if you don't want to travel or you can't travel to be there. You're still going to get all of the learning experience
It,
of
it,
to be able to ask questions and hear
it,
the as well.
yeah, Randy, if you see those comments by Mary, for the people here that don't know Mary, Mary's been coming to our seminars ever. I mean, years. We're talking probably over 10 years. And she made, for instance, on microphone day, she made 25% today. One day, Mary, 25%. Incredible. And everybody knows Mary, she kind of spacey anyhow, so it's really fantastic for Mary, 25% in one day. But she has a lot of comments there. Some of them I can't even be embarrassed to read. But
Marion's
But
here. I'm looking forward to
yeah,
seeing him.
but to go along with Joe, when I started back in 2006, we had covered calls. Now the whole focus of everything we do is generating cash income, not getting paper increases and saying whoa, my stock went up $10 today. I just made X number of dollars. Well, you didn't make a penny unless you actually sold it. We don't do that. We're focused on generating cash that gets added to your account on a daily and weekly basis to generate income that you can either use to grow your portfolio and leave it in and reinvest it, or if you need to spend it to pay bills or go on vacation or whatever that you wish. But it's actual cash that gets added to your account. Now, back in 2006, you bought a stock and sold a call and waited for a whole month. And we were looking at 3 to 5% per month return, which is fantastic. That's 36 to 40% a year.
Yeah.
That's a huge return that you're not going to get anywhere else. But that was our focus 15 years ago. But with all of the changes and the improvements out there in the stock market, and a focus on trading with the options, we can now make, like Joe said, minute by minute income in the tens of percentages of cash added to your account in on a day, day by day. And then what I focus on is more of weekly income, where I, instead of buying the stock and putting all that cash into the market, I have a process where I buy an option and then sell options against it that lasts for a short term. So it leverages your capital. You have a lot less money invested in the market, but can still make really, really good returns on the basis of the week.
Well,
And
Randy,
yeah,
just think about this. Back, you say 3% a month. That was what we used to project. You and I did that years ago.
yes.
That was huge. 36% a year. We showed people how to turn 3,000 into a million or 10 million or something over 10 years. Now,
Mhm.
Randy, and he just mentioned, it's getting like 5% a week, or at least 5% a week, if not 5% a day, and just huge returns. I mean, think about it, 3% a month or 5% a day. Give me a break. That's Randy's. That's the old man slow stuff. You
And
know.
but the thing is, by focusing more on short term,
Mm,
our exposure in that market, and because Micah was talking about, these macro things that happen over the course of a day and a week, our exposure in the market is reduced to a shorter time period. Instead of being in something for a year or a month or a quarter or 5 years, we're only in it a day or 2 or 3 days, and then we're back out. So we get to readjust then with our capital of where the market is at that
mm.
time, because the market's going to go up and down. So a day like today, and we're talking here, and the market's actually coming back, it's an opportunity that I could have got in some positions, but um, it's just resetting. So I had a position in SPY. That's an ETF for the S&P 500, because we're kind of talking about that today. But I entered it on Tuesday afternoon, and then it closed yesterday on Wednesday, because the SPY ETF actually has expirations on Monday, Wednesday, and Friday. So I bought options on Tuesday that were expiring on Wednesday as a covered call, not just an individual option buying and hoping it's going to go in a direction, but with the covered call, which is buying one option and selling another against it deep in the money, meaning that the strikes are way below where the price of the current equity is. The stock can go up, down, or sideways. I still get called out, which is the goal, get all of my capital back and keep the profit. So on my SPY, and I only had 90 cents a share invested. So SPY is trading at 400, and right now it's at 420, $430 a share. I don't have to invest $430 a share to generate income on it. I invested 90 cents a share and got a dollar back yesterday at the close of the market. And even though SPY went down, my covered call was deep in the money. It still got called out. I got my 90 cents back plus another 10 cents, 11.1% return in 1 day of investment.
Yeah,
And that's not the real important part. To me, it's 1 day of exposure of my capital in the market.
Yeah.
Because money in the market, there's a risk, right? The market goes out like today, it drops 500 points on the Dow at the opening of the stock market. Nothing that you could do based
well,
off of that. So being in the market for the shortest period of time right now in these times, because there's so many things that could rile the market one way or the other. To me, that short term focus of being in and out of the market in a minute with the micro moment trading, or in a day or two or three with my synthetic covered call trading, is where my focus is anyway. I don't want to be buying a stock and holding it for the next 3 or 4 months, because who knows what's going to happen to the market in the next 3 or 4 months.
Yeah, but Randy, you could have. A long time ago, we used to, because Randy's never going to lose money on stock. I don't care what he pays for, what it goes to, because he's got so many techniques to continue to produce money on that stock so much, 8% a month, 5% a week, whatever, regardless of the price of the stock. He's got a lot of rules. Micro moment, we don't have but one rule, and that's when the little button you enter it green, it turns red, you get out of it, because we don't have any management abilities whatsoever. We'd rather take a 1 or 2 cent loss than a 10 cent or 20 cent loss. And that's our only rule. Well, Randy has a lot more leeway. Now, he treats his micro moments, a little longer out, like we do also. But Randy's just can never. People, how can I not ever lose money on the stock? Like, for instance, this bartender where I have lunch. It's a sushi place, and I've never mentioned to him what we do. Okay, and he starts talking, and he I don't know, came up. He started talking about he is a what do you call it, day investor? What do you call him? Day trader.
Day trader.
And he's going in. He bought 35,000 shares of this 35-cent stock, and it went to 70 cents. And his other bartender buddy, who really studies the market, told him to hold on. It's going to 70 cents. And he said, "Oh my God, look how much I'm going to make at 70 cents, from 35 to 70 cents. Well, he says that same day it crashed down to 25 cents and he lost a lot of money. Well, we don't do that kind of stuff, but that's your typical investor, and that's you people all over the place like that, So.
Yep.
Now, Marion, for instance, she's still on there. Marion's not that kind of investor. She's calculated. She's a calculating woman. You can just look at her eyes and you can just see she's a calculating woman. And she calculates these things, Yep.
Yeah.
Well, just
looking
as a little bit of follow up to Joe, what you were saying. Last week, I entered 8 positions with my synthetic cover call. So 8 new positions were entered. 7 of them got closed out by the end of Friday, 100% capital recouped and profits locked in. And the profits range from 6.3% for the week up to 25% income for the week. I had one of those 8 that I had to manage into this week, increasing the income, and it's even up today. It's up today another dollar almost. So it is back in the money,
Nice.
where it will get closed out tomorrow with all of its capital return and the extra income for 2 weeks. And so by having the management techniques, which we call them, is what do you do if it goes up? We let it get called out. If it goes sideways, we let it get called out. If it goes down, we let it get called out. If it goes down too much, then we implement the management techniques to continue managing the position and generating more income on it while the stocks go up and down, because that's what the market does. It goes up and down. Over the long term, it goes up, right? I heard on the last week, I think it was on the talking heads on TV, they do all the analysis, and they said there's no 10-year period in the history of the market that it isn't higher at the end of 10 years than it was at the beginning of the 10 years. And they calculated thousands and thousands of time periods. That's one reason why I do covered calls, is because they go up when the market goes up. And if the market goes up in the long term, then eventually whatever I'm in is going to go up, unless it goes out of business. So it's critical of what I select to invest in to be a good, solid, quality company that has a high probability of staying in business and improving in the future. But by having the management process, it keeps me from selling for a loss. I don't sell for a loss. I continue to manage it, generating income on that capital. Just like if I bought a house and the price goes up and down, but I'm renting it out to generate income, I'm not so concerned about the price of the house going up and down. I already invested in it. I'm getting income on a monthly basis from that house, from the rent. In the future, if I want to sell it for more than I bought it for, that's my choice. But otherwise, I keep generating the income on a monthly basis by renting. That's exactly what I do with the stocks and options is I'm investing in them and then renting them out. My rent is I want to rent it for a short term and then sell it at the end of the week, but still generate that income from the rent. And I can keep doing that for a long period of time if I need to.
Hey, Micah, could you throw up Marion's 10:31 a.m. Uh, thing there? Yeah, just check that out. It's cute. And then if you put
Yeah.
up that Steve Howell answer, that's one from Steve.
Sure.
I was going to
Yeah,
Randy, that
and
was a spot trade, but to
yeah,
be honest, go ahead.
well, yeah, Marion, she said that I rock it like that every day, all day, every week. Um, but that's one thing is in our teaching subscription service where I actually teach how to do these processes. I don't teach it with hypothetical. This is what you could have done. This is what you could have done a year ago. Look at this chart from 6 months ago. You could is I use at the moment positions to demonstrate how to do the process and technique. You can go look at them right in the market at that moment, and so you get to see exactly how the process works real time in the market. And so the goal is that you put that in your virtual trading account and you follow along as you're learning the processes until you get good where you can do it on your own. But that's what Marion said. She follows along and sees every single one of the trades that I do throughout the course of the week and sees every one step by step by step exactly how the outcome is. So it's not this hypothetical you could have done this type of stuff. It's real time, right right there in with positions that are live in the market as again for an educational service to where you can learn how to do it yourself.
Yeah, Mike, I love it when Randy and I do that covered calls and leads seminar, 2 day seminar. You, I have to say very little. I don't get to say hardly anything. He talks the whole time. We're both up there on the stage. A lot of times I'll just sit down and go to sleep. But if you'll throw up that Steve, please, Micah. Steve there,
Sure.
that 10:32. Yeah, it says, Steve, do you gentlemen have any plans on having another credit spread class? Okay, the Steve, uh, Keith, who does was can do doing the credit spread seminars. Actually, the credit spread technique that he mastered was developed by Mark. Now, Mark's going to be introducing a new technique in this upcoming uh, master's class. It had to get into credit spreads, but it's a new technique. And the reason that Keith stopped doing the credit spreads is because they just in the market they just got to where they wasn't as profitable as other things. And he does other things. That's what he's going to be presenting at the master's class. But he is the one that made the 1,000%. And those were credit spreads. I mean, those were credit spreads.
Yeah. Yep.
That he made the 1,000% on in the course of a year is huge. And they could come back day after tomorrow. Who knows? It just they slowly got to where it was very difficult to make the fantastic returns. So
Because credit spreads rely on option premium being high.
Mhm.
In this last year, the volatility called the VIX, the volatility index, has been like at record lows. When the volatility is low, option premiums are low. So the credit spread is buy one option and sell another option closer to the money and get a credit. The risk is that the equity moves quickly to the option that you sold, and then you have a an obligation there. When the premiums are very low, you have to get way too close to the current price in order to generate the income, and it's not where we want to be. So to be able to follow the rules of how we teach to implement credit spreads, the premiums just aren't there right now. If the volatility picks back up, then there might be opportunities in the future. So I do all of the different types of techniques that we teach. I do those on a weekly basis. The amount of credit spreads that I do are minimal, maybe one a week, just because the premiums are just not there for doing it. Now, when our charts say that the momentum is maxed out and it's changing direction, then I might do a credit spread on the side that it was going to, and that is changing direction. But that's very, very few of them. It's
Yeah.
just not, as Joe said, it's not conducive right now in the market
Yeah.
for good high quality credit spreads.
But
The micro moment trading is really the
yeah,
best possible thing
it,
right now.
it doesn't mean it won't come back, Steve. I mean, I'm sure it won't. These things never disappear, but they ebb and tide. You know, go back and forth as to which is the most profitable for what you have to do. But yeah.
No, I'm looking forward to the new techniques at the event for sure.
Oh, hey,
just-
don't
the-
forget the editorial this weekend is again what over time, what's changed the market to make it so good. I wrote the editorial. We're going to have a lot of fun with it next week on this podcast, Randy, because you and I were there at the same time.
Mhm.
And so Randy knows, and when he reads that editorial, he goes, I remember all that stuff. And so it's going to be a lot of fun because it's huge. And Micah has not been in it that long, but even the short time he's been in it, which is not like tomorrow or anything. I mean, it's been a few years here now. It's changed a lot, hasn't it, Micah?
Mhm.
Yeah, absolutely. Absolutely.
Yep. Dynamic changes is inevitable. Yep. Also for this event coming up until tomorrow, I thought I'd throw this in before we close out here. The Masters 20 is going to be our code for that event. We are cutting this off tomorrow at midnight. So on the 9th at midnight, it will deactivate. This is 20% off for the live event, which is the Masters in Texas. Again, we have a kind of two and a half day event going on, cocktail party on the 23rd, and then 2 full days of presentations on a bunch of different techniques, even some different financial vehicles. And then we're introducing micro moment crypto. Which
Michael, the cocktail party is the most important thing. Cocktail party is the most important thing.
That's Joe's.
Yeah, right.
Joe looks forward to Friday night. That's his main goal. Because he's not presenting. So the rest of us, we're concentrating on Saturday or Sunday of what we're going to say and how we're going to do it.
But Mike, it's also online, right? There's a link to take it online too. Yeah,
it is.
But
Yeah,
I don't know if we mentioned it's going to be in Fort Worth, Texas, which is a beautiful downtown area.
Yeah.
It's just a great place to be. It's going to be at the Sheraton there. So for those that are thinking about traveling there, at least it's in Fort Worth. So.
Yeah. We have the cocktail party on Friday. It's going to be at the Sheraton, but then we're having a dinner at the place we've had dinners now for 20 years, Mercury Chop House. And they're, for people listening to know about the Mercury, they moved 1 block downtown to just a different corner, and a beautiful, pretty place. And we're going to do the dinner Saturday evening there. It's just going to be a great
nice.
weekend.
And that's the 24th.
Yep, it's 24th and 25th, Saturday and Sunday. But the cocktail party is the evening of the 23rd.
Yeah, 23rd cocktail party, 24th is the dinner.
Yeah, these have always been in the wintertime. We always require to have men have on suits and ties. Now, this is going to be in the heat of the summer. It'll probably be 115 degrees, Micah, so you got a little taste of what it'll be for when you had 115 degrees up there. But it's hot, so it's going to be casual. You don't have to wear suits and ties. So
yeah, I got a linen blazer I dug out, but I'll probably even be taking that off and just go down to the shirt.
Yeah.
But
Joe, I'm looking forward to the Chop House because they've always had my special Dr. Pepper there. In the bottle that's bottled in Waco, Texas, that uses the original formula, and it's just like none other tastes better than that ice cold Dr. Pepper out
Yeah.
of the bottle from Waco, Texas.
My wife and I went over to have dinner at a place called the Oasis. It's on Joe Pool Lake. It's over in Grand Prix, which is between Dallas and Fort Worth. And I haven't been over there in a year. It was there when 20 years ago. And so I ordered, it's outside, beautiful marina and fantastic restaurant. So I ordered catfish, fried catfish, and french fries, and a beer in a bottle, middle of the night, right? I had not had beer in a bottle in 20 years. Most of my wine glasses big open, and martini glasses big open, right? I felt like a complete fool. I had difficulty. I didn't have to open it; they'd already opened it. I had difficulty putting it in my mouth. First, I put the whole damn thing in my mouth and got it all over me, you know. And it took me, a couple minutes there before I could actually drink it properly out of the bottle of a beer bottle. I felt like a complete idiot. I think, good Lord, 20 years I had not had anything, a beer bottle.
Man, did you figure it out after that?
Yeah. Oh, yeah. I was
like riding a bike.
I even got another one. Yeah.
Fantastic.
Yeah.
Mary remembers the special Dr. Pepper.
Yeah, there we go. See here, Joe, here's the case in point, right? The market's down this morning, down big time.
Yeah.
One of the positions I entered this week, and I did very few so far because of waiting to see what happened yesterday afternoon with the Fed meeting minutes. But I entered one position on Disney on Tuesday, and the market dropped substantially today. With the management techniques that I teach, I actually improved my position by lowering the level where I get called out to get all my capital back and a profit. But I also tripled my profit opportunity for expiration tomorrow. And it's now $3 in the money.
Nice.
Because stocks go up and down. So by using the management techniques that I teach, we can actually improve our positions and generate more income by leveraging the market going up and down without speculation. No speculation at all. I didn't speculate that Disney was going to go up or down because I entered a deep in the money covered call that the stock could go up, down, or sideways, and I get called out, which means get all my capital back and lock in the cash returns, which right now are going to be in the 15% range.
And Randy, Maria says, laugh out loud, I remember you talking about that special Dr. Pepper. And
that's right. Yeah.
And she says down here, there's a technique to drinking beer. I stopped drinking beer when I was 8 years old.
There you go.
Usually they don't let you drink out of a bottle anymore. They usually, bring you the glass that you have to pour it in.
Well, and damn good reason. You see no guy like myself. 20 years.
And the younger generation may never have learned how to drink out of a bottle because everything's in cans now. So
exactly.
I don't even know how to do that.
Yeah. If it'd been in a can, I would have been okay.
Yeah, there you go.
There you go.
Not so many things are in bottles anymore. So
yeah.
Except for protein drinks and.
Well, it took me a minute just to decide to take the lemon out.
Corona.
Corona.
Corona. That's what you're drinking, huh?
Yeah.
Yeah. The lime's kind of plug. You gotta hold the top and turn it upside down.
There you go.
I bet they didn't teach you that one. Yep. All right, guys. Thank you for being here.
Okay. Hopefully everybody will be here next week.
Yeah. We'll get everyone on next week. The Cow Report is published every week. You can find that on our website. I'll throw that up for you. If you'd like to sign up for that.
It's free.
Free report and discusses our trading activity, different things coming up, and an editorial every week, which we cover then on the following Thursday's podcast. So this is from July 3rd, and we'll do it again tomorrow and the following Thursday. So I want to thank everyone for being here. If you are curious about how the trading activity actually works, find us on social media, pretty much every one of them. And we have example videos, all sorts of live trades and everything you could need if you're curious. So, yep. Alrighty, guys.
Thank
Thank
you,
you
Mike.
very
I
much.
appreciate it.
Yeah, absolutely.
Randy,
And we will catch you
Thanks.
on Tuesday.
okay.
Look forward to the market action the rest of the day and tomorrow.
It's good.
It's coming back. The money's flowing back in again. When it goes down, money comes
Yeah.
back. So let's see
Yeah.
what happens. But take care. Hope you have everyone have a great weekend. Talk
All
to you
right.
next week.
Likewise. Thank you.
Bye.
Bye bye.